we have got the number, and it's a rather shocker of a number, coming in at 6.01. I mean, this is a heartbreak of a number. We were just discussing that the WPI may not be all that market moving, but an ugly number like this can make all the difference. We still don't have more details, but widely expected to be 5.3 now, is 71 basis points higher than what the average was, is a little startling. Rupa, first thoughts?
No, it's a real shocker, as you said. It's a very ugly number, and we have to see now where lies the core inflation and the manufacturer product price inflation, because I think if at all this pressure has come, it must have come from the election-led spending and its impact on consumer durables as well as consumer non-durable sales, because we have been seeing some kind of uptrending of core inflation in last few months. But of course 6.01 is way above anybody's expectations, and I would like to see the disaggregated information.
Well, we do have the information which is out. We have the food articles inflation as suspected, which is coming at 9.5% versus 8.64% month on month. We have fuel and power, which is inched up all the way to 10.53% versus 8.93% month on month. And the primary articles inflation totally has inched up as well to 8.58 versus 7.06. So it seems as though food articles as well as fuel and power are the key culprits for the inflation figure to come in at that 6% mark. Aditi, your thoughts, your first thoughts?
And it's a bit intriguing, isn't it, that food inflation actually showed a bit of a mellowing in the CPI numbers. They fell from, I think, 9.66 in April to around 9.4% in May. Aditi, this is a little bit of retracing of those steps. You think this will deeply disturb the Reserve Bank?
See, I think there's a couple of things that, are important over here. We have seen a few months even earlier where the WPI and the CPI food inflation have moved in different directions. I think at this point in time, what's really important is that we're looking at a number which is above 9% for food inflation on both the WPI and the CPI, and this is before the monsoon, subpar monsoon has even hit. We're talking about data for May. So whether or not, there is a full crystallization of the fears as far as the El Nino is concerned, I think this really is the time for the central government and all the state governments to really put in place plans, contingency plans as far as dealing with a monsoon is concerned, and also really looking at what are the supply side and the market inefficiencies that can be dealt with ASAP, whether or not we actually end up with a monsoon that's as bad as
Aditi, I'm just going to interrupt you for a second, because we have the core inflation data which is out, Lata, and that's a 40 basis points hike that we've seen in the core inflation data. It's come in at 3.8% versus 3.4% month on month. And more disconcerting is that the March WPI data has been revised higher by 30 basis points. It's revised higher to 6% versus 5.7% month on month as well. So that is the March WPI data that has been revised, and we haven't seen a revision of such an extent for quite a few months, if I recollect correctly. But it's definitely the core inflation which is inched up around 40 basis points, Lata, 3.8 versus 3.4.
It's an all-round bad number. All components have contributed. Core has come in about 40 basis points higher. Food has come in higher. If I remember right, we read it as 9.66 food articles. Okay, there is the month-on-month increase, and that's also fairly ugly at 2.3%. Food articles last month rose by 1.5%. This time the month-on-month rise is 2.3%. Primary articles as a whole, which means even non-food articles perhaps have risen. And that's the manufacturing products index, which is really very close to the core index if you strip out food. So that has come in at 3.55 versus 3.15. That is the manufacturing products index. So, this has been an all-round ugly set of numbers. Last time the month-on-month increase in manufactured products was 0.2. This time the month-on-month is 0.5. This is looking a little disturbing. Rupa, the RBI has sworn allegiance to the CPI. Therefore, should this number still be a cause for worry? Do you think that the RBI will also therefore drag in WPI as an important indicator, and therefore should we expect some action in the next policy?
Well, all data points are equally important, even if they are anchoring, they have made CPI-led inflation as a nominal anchor. Information content in WPI is also important to them, primarily because the weights of, commodities differ considerably, and we all know a major portion of CPI is contributed by food and fuel. But core inflation matters a lot from the perspective of monetary policy making, and 40 bips increase sequentially in core inflation is definitely a worrying factor for the Central Monetary Authority. So I think this data point will definitely add to their inflation worries.
Well, we have seen an inch up in the bond yield as well. So from 8.62, it had gone up to 8.64. Now it's come down to 8.63, but the yield has gone up after this data came out, and there has been a reaction in the market as well. So straight away, about 20 points got shaved off after this number came out. The Nifty was hovering at levels of 7525. Now it's almost down to that 7500 mark. And quickly then, Bank Nifty as well has seen a similar down tick reaction. Bank Nifty also down in excess of more than 1%.
Well, okay, yeah, this is not looking good. Food articles rising month on month by 2.3%, and manufacturing products rising month on month by 0.5% compared to 0.2 in the month ago, that is in April, which means we are accelerating at an accelerating pace. Yeah. That's not a very positive thing at all for inflation. Aditi, now do you think all of you will go back to the drawing board in terms of the inflation trajectory? We have still not got the El Nino impact. We have still not got the Iraq war impact. So, are we now going to have a fairly serious review of your inflation trajectory?
Lata, I think as we get information coming in every week on the monsoon, we're going to be revisiting what our assumptions were as far as what the overall season would look like. And I think right now the situation is pretty fluid. We don't have enough information right now to really kind of say that our worst case scenario is going to be the base case now. But, every week as we get data on how much ground has been covered or what kind of shortfalls we're looking at, we are definitely going to be going back and reassessing the trajectories. One point on the core inflation, in February it was already at 3.8 after the revision, and my guess is that this big revision that we've seen in March for the headline is probably also contributed by the core. So perhaps if we look at the May at 3.8 versus the 3.8 revised for February and perhaps a similar level for March, it's the April that would need to be revised upwards to get back into line. So maybe we're not going to end up with actually an MOM of 0.5%, but the fact of the matter is that we're getting a delayed reaction in terms of what the actual data is looking like.
Your point is well taken. Yeah, but you're right that you all will have to process information as it comes. Meanwhile, the rupee has taken a